Have you ever wondered how to truly achieve financial freedom? It's a question that lingers in the minds of many, and the answer often lies within the realm of investments. Investments, you see, are more than just a means to an end. They're a path, a journey that leads us towards financial independence and stability. But as with any journey, having a clear destination or goal is critical. It gives your investments purpose, direction. It's about knowing where you want to be financially and using your investments as stepping stones to get you there. Moreover, understanding the basic principles of investing is key. It's not merely about buying low and selling high. It's about understanding market trends, risks and rewards, asset allocation, and so much more. Knowledge, as they say, is power. And in the world of investments, it's your greatest ally. So let's embark on this journey of financial enlightenment together, shall we? Investments come in many forms, each with its own set of pros and cons. Let's take a journey through the diverse landscape of investment options, shall we? First on our list is stocks. When you buy a company's stock, you're effectively buying a piece of that company. Stocks have the potential for high returns, especially in the long term. However, they can also be volatile, with prices that can swing wildly from day to day. Next up, bonds. Bonds are essentially loans that you give to a government or a corporation. In return, they promise to pay you back with interest. Bonds are generally considered safer than stocks, but their potential for returns is also typically lower. Then we have real estate. This involves buying property, either to rent out for steady income or to sell at a profit later on. Real estate can provide a good hedge against inflation, but it also requires a significant initial investment and can be difficult to sell quickly if you need cash. Mutual funds are another popular choice. These are investment vehicles that pool money from many investors to buy a diversified portfolio of stocks, bonds, or other assets. They offer instant diversification, but they also come with management fees and are often less flexible than owning individual stocks or bonds. Lastly, commodities. These are physical goods like gold, oil, or wheat. Commodities can be a good hedge against inflation and a way to diversify your portfolio, but they can also be highly volatile and influenced by factors like weather and geopolitical events. Each of these investment types comes with its own unique blend of potential rewards and risks. Some may be more suited to your financial goals, your risk tolerance, or your time horizon than others. Understanding these various investment types is the first step towards making informed decisions about your financial future. So, equip yourself with knowledge, and you'll be well on your way to navigating the world of investments with confidence and savvy. Now that we know the various types of investments, let's delve deeper into their pros and cons. First up, stocks. They can offer high returns, and with the right knowledge and strategy, you can potentially make a fortune. Plus, they offer ownership in the company, which means if the company does well, so do you. However, they also come with high risk. The stock market is volatile and unpredictable, which means you could also lose your investment. Next, we have bonds. These are considered safer investments as they provide regular income through interest payments. They're stable and predictable, which makes them a good choice for conservative investors. But the downside is that they offer lower returns compared to stocks. And if the issuer defaults, you could lose your investment. Real estate is another popular investment choice. It can provide a steady income stream through rentals and has the potential for capital appreciation. Plus, it's a tangible asset. You can see and touch it. But real estate requires significant capital to start. It's not as liquid as other investments, and it comes with its own set of risks like property damage or market downturns. Mutual funds, on the other hand, offer diversification. They're managed by professionals and can provide access to a variety of investments, but they come with fees that can eat into your returns, and their performance is dependent on the fund manager's skill. Lastly, let's talk about cryptocurrencies. They're digital and decentralized, which gives them a certain allure. They can offer high returns, but they're highly volatile, and the market is relatively unregulated, which makes them risky. By understanding these pros and cons, you can make informed decisions that align with your financial goals and risk tolerance. Now, you might be wondering, what are the best types of investments? Well, let's dive right in. The best investment is rather subjective, as it largely depends on your individual circumstances. For those with a high risk tolerance and a long-term financial goal, stocks could be the prime investment. They offer potentially high returns over the long haul, despite the short-term volatility. On the other hand, if you're more conservative and prefer stability, Bonds or certificates of deposit might be your best bet. They provide regular income with less risk, although the returns aren't as high. Real estate, a tangible asset, is another appealing option, especially for those who appreciate the physicality of their investments. Then there are mutual funds and exchange-traded funds which offer diversification and are excellent for those who prefer a hands-off approach to investing. Remember, the best investment is the one that aligns with your financial goals and risk tolerance. Investing may seem daunting, but with knowledge and understanding, it becomes an empowering tool for financial freedom. We've journeyed together through the world of investments, exploring the various types, each with its unique advantages and potential drawbacks. The key takeaway is that there is no one-size-fits-all best investment. It all hinges on your individual financial goals and risk tolerance. Are you aiming for a comfortable retirement, saving for your child's education, or perhaps you are looking to make a hefty purchase a few years down the line? Understanding your objectives is the first step. Your risk tolerance is equally important. Can you weather the storm of a volatile stock market, or would you prefer the steady, albeit slower growth of bonds? These are questions only you can answer. So, equip yourself with knowledge, set clear financial goals, and embark on your journey to financial freedom. Happy investing!